Hello everyone, welcome to Rajeshwari's Commerce and Management Study Hub. I am Rajeshwari here. Let us discuss today journal entries under the IO purchase system by solving this question. Okay, the question is Deepika purchases a Maruti van on hire purchase system from Sagar Motors on 1/4/2020. She pays rupees 1 lakh down and rupees 80,000, rupees 70,000 and rupees 60,000 at the end of first, second and third year respectively. Interest is charged by the vendor at 20% per annum. Deepika writes off depreciation at 10% per annum under diminishing balance method. So in this question, first we will write the given information to understand what we need to find out, right? So what are the given information? First here down payment is given. Down payment is how much? It is 1 lakh. And installment is given. Installments they paid in 3 installments. First installment it is 80,000, 70,000 and rupees 60,000. And rate of interest is given. Interest is at 20% and depreciation is also given. The percentage of depreciation is at 10% and method is also given, that is diminishing balance method or WDV method, return down value method. Under diminishing balance method or WDV method or reduced balance method, we will calculate depreciation on the balance amount. After calculating depreciation, we will deduct with the cost of the asset. Then on the balance, we will calculate the next year depreciation. That is why it is called as return down or diminishing balance method or reduced balance method. Okay. Now, here to find or to calculate depreciation, we need a cost of the asset. But we don't have cost of the asset, that is cash price of the asset is not there. So, we need to find out the cash price of the asset. How we can find the cash price of the asset? By using this table, we can find the cash price of the asset. Here, the installment, whatever they are given, this includes interest also. So, if we find out the amount of interest, then we can deduct that interest with this installment amount. It's easy for us to find the principal. If we add the principal, the final beginning of the year, whatever the balance was there, no? So that will be our remaining cash price balance, because half of the amount or 40% or 30% of the amount we have paid in down payment. Right? If we add, we will get cash price. Now we'll find out the cash price of the asset. How we are recording here? We purchased in the year 2020. The first installment paid in the 21 and 22, 23. We are not going in this order how we have paid. We'll go in a reverse order. ನಾವು ರಿವರ್ಸ್ ಆರ್ಡರ್ ಅಲ್ಲಿ ಇಲ್ಲಿ ಕ್ಯಾಲ್ಕುಲೇಟ್ ಮಾಡ್ಕೋತೀರಿ. ಏನಕ್ಕಂದ್ರೆ ಇನ್ಸ್ಟಾಲ್ಮೆಂಟ್ ಜೊತೆ ಇಂಟ್ರೆಸ್ಟ್ ಇನ್ಕ್ಲೂಡ್ ಆಗಿದೆ. ಇನ್ಸ್ಟಾಲ್ಮೆಂಟ್ ಇಂದ ಇಂಟ್ರೆಸ್ಟ್ ನ ಮೈನಸ್ ಮಾಡಬೇಕು. ನಮಗೆ ಲಾಸ್ಟ್ ಇಯರ್ ಅಲ್ಲಿ ಬರೀ ಬ್ಯಾಲೆನ್ಸ್ ಅಮೌಂಟ್ ರಿಮೈನಿಂಗ್ ಏನಿರುತ್ತೆ ಆ ಬ್ಯಾಲೆನ್ಸ್ ಇಂಟ್ರೆಸ್ಟ್ ಇರುತ್ತೆ. ಸೊ ಅದರಲ್ಲಿ ಇಂಟ್ರೆಸ್ಟ್ ನ ಮೈನಸ್ ಮಾಡಿದ್ರೆ ಪ್ರಿನ್ಸಿಪಲ್ ಸಿಗುತ್ತೆ. ನಮಗೆ ಅವಾಗ ಪ್ರೀವಿಯಸ್ ಇಯರ್ದು ಅಂದ್ರೆ 22 ಇದು ಬ್ಯಾಲೆನ್ಸ್ ಕಂಡುಹಿಡಿಯಕ್ಕೆ ಈಸಿ ಆಗತ್ತೆ. ಅದಕ್ಕೋಸ್ಕರ ನಾವು ರಿವರ್ಸ್ ಆರ್ಡರ್ ಅಲ್ಲಿ ಕ್ಯಾಲ್ಕುಲೇಟ್ ಮಾಡ್ತೀವಿ. ಅಮೌಂಟ್ ಡ್ಯೂ ಅಟ್ ದ ಎಂಡ್ ಆಫ್ ದ ಇಯರ್ ಇದು ಆಫ್ಟರ್ ಪೇಮೆಂಟ್ ಬರುತ್ತೆ. ಸೊ ಇಯರ್ ವಿ ಆರ್ ನಾಟ್ ರೆಕಾರ್ಡಿಂಗ್ ಬಿಕಾಸ್ ದ ಲಾಸ್ಟ್ ಇಯರ್ ಇನ್ಸ್ಟಾಲ್ಮೆಂಟ್ ಪೇಯ್ಡ್ ಆದ್ಮೇಲೆ ಮತ್ತೇನು ಆಫ್ಟರ್ ಇರಲ್ಲ ಫೋರ್ತ್ ಇಯರ್ಗೆ. ಸೊ ದಟ್ಸ್ ವೈ ಇಟ್ ವಿಲ್ ಬಿ ನಿಲ್. ಓಕೆ. ಅಂಡ್ ದ ಥರ್ಡ್ ಇಯರ್ ಇನ್ಸ್ಟಾಲ್ಮೆಂಟ್ ಇಸ್ 60,000. ದಿಸ್ ಇಸ್ ಬಿಫೋರ್ ಪೇಮೆಂಟ್. ಬಿಫೋರ್ ಪೇಮೆಂಟ್ ಎಷ್ಟಿದೆ? 60,000 ಇದೆ. And here we need to find out the interest. And this amount already includes interest. So the rate of interest is 20% divided by 100 plus 20. 100 plus 20. We'll add the given percentage with the interest. Okay. On 60,000 into 20 divided by 120. 10,000 is interest amount. 60,000 includes interest also. From installment minus interest, 60 minus 10, 50,000. 50,000 is our principal amount. So this is the due for the second year. After payment, ಆದ್ಮೇಲೆ ಇರೋದು 22. Right? So that's why we are recording this 50,000 here. And what is your second year installment? Second year installment is 70,000. 70,000. The installment amount is 70. The balance was after payment is 50. 50 plus 70, total amount before payment is 1,20,000. On this amount, we are calculating interest. Okay. 1,20,000. 1,20,000 into 20 divided by 120 is 20,000. Interest. 1,20,000 minus 20,000 is 1 lakh. Here, please remember, you are deducting to get the principal amount from this amount. Before payment, whatever due amount is there, no? From that amount, you need to minus this interest. Okay? 1,20,000 minus 20 is 1 lakh. Okay? Next, the beginning of the year. This is our first payment. Amount due is the principal amount, 1 lakh. And the first installment amount is rupees 80,000. 1 lakh plus 80 is 1,80,000. On 1,80,000, 1,80,000 into 20 divided by 120 is 30,000 interest. 1,80,000 minus 30 is 1,50,000. This is the balance in the beginning of the year. Right? How we will get this balance? See, if we have cash price, the X amount is our cash price. From this, we will deduct down payment, whatever we have paid the initial payment. If we minus, we'll get the balance amount. The balance amount, this balance, what 1,50,000 is there, no? That is this balance. Now, to get the cash price, what we have to go in reverse. So, we have a balance in the beginning of the year. Balance is 1,50,000. To this amount, we are adding down payment. So, down payment is how much we paid? 1 lakh. 1 lakh down payment pay ಮಾಡಿದ್ದೀರಿ. ಆ cash price ಎಷ್ಟಾಯ್ತು? Cash price is 2,50,000. 2,50,000 is cash price. Understood? Here we have taken in reverse order because we don't know the cash price. To find out the balance beginning of the year, we have recorded in the reverse order. From the amount due before payment, we have deducted the interest, we got the principal amount. To that amount, the balance in the beginning of the year, to that amount we have added down payment, then we got the cash price. Now we have cash price. So now we can calculate depreciation. Calculation of depreciation. What is the cash price of the asset? That is cost of the asset, 2,50,000 van value. On this we are calculating first year depreciation. First year depreciation is, what is the percentage of depreciation? It is 10%. 2,50,000 into 10% is 25,000. Balance is 2,50,000 minus 25, 2,25,000. Right? Now second year depreciation is, second year depreciation on 2,25,000, 10% into 10% is 22,500. 2,25,000 minus 22,500, the balance is 2,02,500. Right? Now last year, that is third year depreciation on 2,02,500, into 10% is 20,250. Balance is 1,82,250. Right? Depreciation we have calculated on balance. That's why it is called written down value or diminishing balance method. Now we found cash price also and interest amount whatever included in the each installment and the depreciation. Let us pass the journal entries. This is the format of journal. Date, particulars, ledger folio, debit amount column, credit amount column. Now, the first entry is date we purchased, we made a down payment, right? So, what date we purchased? On 1/4/2020. On this date only we made a down payment. So, first entry is for down payment. Okay, don't by heart. Always try to understand. If you understand and record, or if you understand and write, you will never ever forget. Okay, on 1/4/2020, first entry we are passing on down payment. First is due entry we are showing, then we are showing the payment entry. Okay, so what we purchased, when we purchased, van account we are debiting, van is coming into the business, so van account data to, from whom we purchased, Sagar Motors we are crediting, Sagar Motors account. What is the amount of down payment? It is 1 lakh. And the narration is being down payment due. Down payment due. So this is first entry. And the next entry is on same date payment entry. While making payment, we are debiting Sagar Motors because debit the receiver. They are creditors or suppliers for us. It is coming under the personal account. Okay. Sagar Motors account debtor through bank we are making payment. So bank account we are crediting. Okay. To bank account 1 lakh. Credit what goes out, right? Being down payment made. The next entry, first year, at the time of purchase, only down payment we have made and we received the van. So we debited van account and we made a payment by debiting Sagar Motors and crediting bank account. Bank is also coming under the personal account, right? Debit the receiver, credit the giver. Next entry is first installment. Every year end we made payments, installment amount. For what we paid this installment? For purchase of van. So van account we are debiting, with van the principal amount we are making interest also. So interest account for us it is a expense. For the higher purchaser, for Deepika it is a expense. We are debiting interest account. For Sagar Motors it is an income. Okay, van account data, interest account data to Sagar Motors account. Motors account. Now here you need to know what is the amount of installment. The first installment is 80,000. This includes interest also. What is the amount of interest? 30,000. Now out of 80 minus this 30. What is the principal amount? 50,000. 50,000 you are recording. Van account 50,000 and interest account is 30,000. Totally we paid installment 80,000. Principal plus interest is installment. This is due entry being first installment due. Installment due. The next entry is payment entry. Now we are making payment through bank. To the Sagar Motors we are making payment. So we are debiting Sagar Motors account, and through bank we are paying, we are crediting bank account to bank account 80,000. 80,000. Right, being first installment paid. First installment paid. Now the next transaction is, this is the date will remain same. We paid interest and Deepika charged depreciation also. Depreciation is a non-cash expense. It is just reduction in the value of an asset. Depreciation is a expense. Depreciation account data. It is coming under nominal account. So we are debiting depreciation account and we are crediting van account. On van only we are charging depreciation. What is the first year depreciation? The first year depreciation is 25,000 that we are recording. 25,000 being depreciation charged. Being depreciation charged. This is about the first year entry. Now we have created the interest account and the depreciation account. We need to transfer the interest and depreciation to profit and loss account. Here, while we created account, we debited the interest account and the depreciation account. Now, while transferring this to profit and loss account, we are debiting profit and loss account, and crediting interest account to depreciation account. Interest is 30,000. Depreciation is 25,000. Totally 55,000 we are transferring to profit and loss account. Being interest and depreciation transferred to profit and loss account. Transferred to profit and loss account. This is about the first year installment. Now the entry remains same year. For the installment, depreciation, transfer entry, only the amount changes. Now we'll pass the next year entry. Next year is on 31st March 2022. The first entry is installment due entry. We are debiting van account debtor, interest account debtor to Sagar Motors account. Now what is the amount? Second year 70,000 includes 20,000 interest also. 70 minus 20, 50,000. 50,000 interest is 20,000. Total installment is 70,000. Being installment due. Installment due. Next entry is payment entry. By debiting the Sagar Motors, the date is same. Sagar Motors account data to bank account. Bank account 70,000. Being installment, second installment paid. Made or paid. The next entry is depreciation entry. Depreciation, date is same. Depreciation account data to van account. What is the second year depreciation? Is 22,500. 22,500 being depreciation charge. Now we are transferring depreciation and interest to profit and loss account. Right? Profit and loss account debtor, loss account debtor to interest account to depreciation account. Interest for the second year is 20,000 and second year depreciation is 22,500. That is 42,500 being depreciation and interest transferred to profit and loss account. Loss account. Now the last year entry. The first entry is on 31st March 2023. Installment due entry. Van account we are debiting. Interest account also we are debiting to Sagar Motors account. Motors account. What is the amount? 60 minus 10, 50. Right? 50,000 is principal amount, 10,000 is interest, and total installment is 60,000 being installment due. The next entry is payment entry, that is on 31st March 23. Sagar Motors account debtor. Motors account debtor to bank account. Amount is 60,000 being last installment paid. Installment paid. Right. Now the entry is installment entry we have done. Then depreciation entry. 31st March 23. Depreciation account data to van account. What is the last year depreciation? Last year depreciation is 20,250. 20,250 being depreciation charged. Now we need to transfer the last year depreciation and interest to profit and loss account. Profit and loss account debtor to interest account to depreciation account. Interest is 10,000. Depreciation is 20,250. Total 30,250. Being interest and depreciation transferred to profit and loss account. Right. Now we have passed all 3 years entries. Okay. So first we have calculated the cash price of the asset by writing in a reverse order. Okay. And deducted the interest from the installment. We found the principal amount. By calculating the beginning of the year balance, we had a down payment to that balance and we have received the cash price. Okay. After that, we have calculated depreciation under the diminishing balance method. Then we have passed entries. The first entry is for down payment entry. One entry is due entry, another entry is the payment entry. Okay, then each installment the entry remains same, so don't by heart, try to understand. And these journal entries we have passed in the books of Deepika is higher higher Deepika is higher purchaser. Okay, when in but the installment entry is first entry is due entry. We have debited van and debited interest by crediting the our vendor account, that is Sagar Motors account. While making the entry, we debited Sagar Motors account, credited the bank account. Okay, and then we charged the depreciation also. Depreciation we have debited because it's a nominal expense account, we debited, and it is a non-cash expense, so we have credited the van. On van only we have charged the depreciation. Okay, try to solve this question while watching this video. Also note down each points and then try to pause more questions and journal entries. Have a great day. If you are not yet subscribed, kindly subscribe the channel. Press bell icon to receive updates. Have a great day.